Welcome back to Midcap Radar. Well, as promised, Atul Tiwari, Executive Director, India Industrials, Electric Utilities and Infrastructure from JPMorgan joins us now. Thank you so much, Atul, for joining us. Well, first up, today is the day in which you actually see the mega GST reforms come into effect. Now, while this is extremely positive news as far as the consumption sector is concerned, there are worries that this could take away from the pie that earlier industrial Capex was enjoying. Your thoughts on this issue?
Yeah, so yes, those worries are there, but our view is that over medium term, the broader Capex in India should be able to grow in line with nominal GDP at about 10%. And the reason is that the overall policy focus of government continues, on infrastructure creation. Post-COVID, for 2-3 years, we saw very strong government Capex. In a couple of years, the Capex grew even 18-20% year on year. I think that era is behind us for some time. However, 10% kind of growth should be achievable given the need to create infrastructure, some bit of demand creation that will happen because of these tax cuts as well as government policy focus. In addition to that, there are large parts of the Capex which are driven by private sector balance sheet, in particular the power value chain Capex, both on thermal power side, renewable side and transmission side, and that part of the Capex, because it is being funded through private balance sheet, will remain intact. So overall, because of these factors, we think that about 10% kind of overall Capex growth should be achievable over medium term.
Atul, good afternoon. Thank you for joining in. There is this general chatter on the street that funds from Capex is now moving to consumption, considering the recent reforms that we have seen on the GST front. Does that also drive a little bit of concern with regards to the fact that this might lead to a prolonged period of underperformance, especially considering the fact that all of these names have run up significantly over the last year or a year or two?
Yeah, so actually, if you look at the some of the near-term plan that the government has put out and some of the data that has come out. So for this year, central government's budgeted Capex growth is about 10-11% already. Obviously, this is on a low base of last year. So the government's intent is to grow Capex 10% this year. And actually, if you look at some of the early data that has come out so far in this financial year, in the first quarter, the Capex growth has been quite strong at about 50% year on year, though on a low base because last year was an election year. So it does look like to us that while yes, there is some consumption stimulus and some money is being diverted to that, but broadly a 10% kind of Capex growth over medium term should be achievable. In the year of transition, we could have a slightly lower growth than that, but we have to keep in mind that we are already 1 year into the slowdown. So this Capex slowdown kind of started early next year. And given the developmental needs of the country, we think that over medium term, we should get back to about 10% growth path.
Right. Atul, earlier this month on September 9th, there was a very interesting report from your stable stating that you are expecting Capex growth to bottom out at 10%. In fact, there are quite a few stocks on which you are positive as well. Now, within this entire space, where are you most positive on? Where do you see exceptionally large order inflow? Especially, do you see some of the Saudi-related Capex to continue for some of our players that are exposed to the Middle East?
Yeah, so broadly, from the top-down perspective, where we see the pockets of opportunity, in this year of consolidation and in this new era where Capex grows at 10%. We think that the power-linked Capex will continue to grow. So on the power generation side, on power transmission side, we will continue to see very strong activity, and the players which are exposed to that, will continue to benefit. In addition, yes, in Middle East, broadly, we are seeing, very strong Capex activity. Till about last year, that activity, was concentrated in, countries like Saudi Arabia, but we have seen in the order inflows of some of the larger names where the activity has expanded beyond Saudi Arabia, and companies have got order from Qatar and Kuwait and other places as well. So we think that that's obviously an area of very strong activity in addition to the power capex in India on infrastructure side. And then obviously, we also see the defense capex in India as a structural growth story, obviously driven by government policy focus as well as government budget. So these three parts of the capex bucket will continue to grow for quite some time.
Understood that. Thank you so much for joining us. We hope to get you on the show to have a slightly longer chat than this time around. But thank you so much once again and for highlighting the key Capex beneficiaries, especially as some worries spill over into this particular theme. But we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.